What's up, everyone? Welcome back to the channel. Today I wanted to do a little video about supply and demand zones. I want to talk a little bit about the market, considering that it's a little bit of a red day actually. And I wanted to talk about our DCA portfolio, which I did a video about earlier this month. Uh, I have been dollar cost averaging in a little bit on my normal holdings, and I'm now going to see what will happen in the coming few days if we bounce back up or if we go further down. Either way is fine. I've said that before as well. Before I get into the rest of the video, I wanted to thank you all so much. We have officially surpassed 100 subscribers. Something I did not think would happen when I started this channel. So thank you all very much. And yeah, let's continue to grow it. Let's reach for 500 next, and let's try to get to it. If you haven't liked or subscribed yet, and you like the video and or videos, and you want to subscribe, please do so. You can click it right here below or in the bottom right corner. It will help me out tremendously, and it will enable me to make more content sooner, faster, and possibly even better. All right, so let's get into the video. And one more thing, everything I say or do is my personal opinion, my personal experiences. Please take them for what they are, and don't blindly copy anything I do. Just learn from it. All right, let's get into the video. All right, so here we are back at our home base coin market cap. Today, like I said, we're down 3.5%. It's not a lot. I think it's more than normal after the big push up we saw. That there's going to be people taking profits. Obviously, on the smaller caps, the smaller coins, the amount of profits taken will have a percentually bigger effect, which could cause some panic sells. People who got in much later than we did, uh, to basically panic sell to try to prevent their losses. So it could have a bit of a cascading effect, but I'm not too worried. Like, even the news we see here, it's all still very bullish. Everything's very positive, especially longer term. Like I've been saying before, longer term is positive. So any price we buy now, it will be good, at least for us. The only thing we have to prevent ourselves from doing is selling at a loss. So we have to prevent ourselves from buying into these lower cap coins on the wrong time, on the wrong moment, and not buy more, or don't DCA and just put everything in at once. If a coin then drops 50%, yeah, it's going to take 100% to get back to where we were. So that could take a very long time. So that's why our dollar cost averaging is so important, and that will weather the storm if we follow it correctly. So if we take a quick look at the coins here, like Bitcoin's down, Ethereum's down. Well, Tether is obviously a stable coin, but Solana is down, BNB is down. Ripple, although it had a nice push up on the 7 day, but in general, all our tokens are down. Um, not like I said, not necessarily a bad thing. Um, our extreme greed as is it's still an extreme greed, but it has rebounded a little. But when we were around here, I said we need to see these downs before we see these big pushes up, which is exactly what happened. We dipped down, we shot up. And the question is now, like, will we see the same thing like this happening? Will we slowly veer more down, or will we see bigger pushes up? Personally, I think around the beginning of next year will be a bigger push up. I think most of the Bitcoin hype has been done for now. Probably we won't shoot straight down, but it'll be a bumpy ride either way. But that still means we can take advantage of these little dips that we see. So uh, we need to see more fear in the market before we see a bigger push up. Is basically what I mean. So for now, it's a bit in no man's land. It's a bit yay or nay. But like I said, not a bad thing. crypto bubbles, a lot of red. We see a lot of red, but it's still percentually it's nothing. Like Solana's been is up. I thought it was 350% on the yearly, so a 5% correction, nothing to worry about. What it does present though is it might be a nice buying opportunity. I bought Solana maybe a bit too soon, not the entire dip, but I bought Solana yesterday, uh, late in the day, so it was dipping down. So I did buy it on the dip. So I bought some Solana, I bought some Doge, I bought a few other coins, Ethereum, basically all my general holdings. I dollar cost averaged in a little bit. Uh, This is why I had a lot of cash on the side. I took profits on the way up. Now when we go down, I get to buy cheaper back in. Tiny fragments, mind you. So I bought small portions, so I still have cash on the side. I keep cash on the side to be able to buy these dips, to buy cheaper. So the lower we go, the cheaper I buy. Until eventually it runs out, but my monthly deposits catch that. So every month I put a little bit more in, and I manage to average my price down even further. What I also mentioned in the last videos, or one of the last videos, is like we need to see Bitcoin go down before we see bigger moves to the altcoins. I think we're in that process right now. So I don't think we will see a huge, massive push up on Bitcoin itself, or at least not immediately. I think we will see altcoins come back, well, come to life, really. But like nobody knows exactly when. I think around the next year. I think December will be slow, low in volume, sideways movements, and then the next year when everybody goes back to work, everybody goes back to trading, everybody has time for this again, is instead of spending time with family and whatnot. I think that's when volume returns to the markets, and that's when we will see bigger moves, either up or down. So this is our dollar cost average portfolio I was talking about earlier. We bought what I think was the absolute top. We bought the top of the market, and we can see it in our holdings. We put roughly $200 in each of them. And well, Solana and Bitcoin are still up. But as you can see, Dogecoin's down, Ethereum's a little down, BNB is a little down. For this portfolio, I'd say we need to wait. We need to wait before we add our second DCA moment. And we're still in the same month. So we have basically any time in December. I think a few more, 2 to 3 more weeks is when I will start to push more into this. I will monitor the price though. So if I do catch a big dip, I'll move some money in and I'll work that into the next video. But as you can see, for the 1 day, -5, -6, -2, -5, -5.6, 5.7. This is roughly where I will start looking for dollar cost averaging moments. But considering it's only 1 day of red, I think we can go a bit lower. So I might miss this dip, but like I said, 5% is not that much. We'll just wait and see what happens. If in 2 to 3 weeks, maybe in a week, when December starts, our December dollar cost averaging moment will come and we can shove that money in, or we keep it on the sidelines a little longer and we add more. So I wanted to work that in this little video, and I'll base it. I'll base our trading strategy of basically off our dollar cost averaging. So if we go, I got a clean BTC USDT chart. It's on the daily time frame. 1 day, week, months, but it's on the daily time frame. So I've seen a lot of people ask, especially new people who came in on the top, bought on the top, so panicking now. Newer people in the crypto in general, people sawing Bitcoin going completely crazy. How to trade on a chart? Well, there is no easy answer. There's hundreds of indicators. There's hundreds of strategies. The thing I would start with is basic support and resistance. Well, what support? Support is where the price is being caught on, where the price will stabilize and go back up. Resistance is basically this. The price came up to here. Needs to be read. The price came up to here. It rejected this level and it bounced back down, which is 99,250. So basically, it almost hit the 100,000, but people take profits a little before these targets. So this is basically where big parties started selling and the price rejected. So now we want to know, how low can the price go? Well, if you look here, this is a volume zone, really. This is where people started selling earlier, people started buying more, a lot of volume came into the market. So we could say that maybe when we reach this level again, that could be a green level. And it's a little bit different because there's not any history on this because it's an all-time high. There's no place around here where we can say, oh, the price will catch on this level, because it's done that historically. So it's a little bit of new grounds that we're breaking, but uh, especially with crypto, it's like this. People all over the world are all looking at the same charts. We're all drawing these lines, and they're all banking on the same zones being high volume areas, either up or down. We know the price will start to do something when we reach it. It could be a little up, it could be a little below. These lines are never exact to the dollar amount, but it'll come close. It's the same like people who were banking on it reaching 100,000. You can see how close that is. It's a little above, admittedly, but you can see how close it is. 100. That was one too many zeros. Anyways, you can see how close it is. And my bet is, my personal guess is, we will see this level hit. If it goes back up, I don't know. If it goes back down, I also don't know. What I do know is that, in my opinion, this will be an excellent time to start buying back in. Because if we look at our chart, it's roughly 12% down. So a 12% discount on the Bitcoin price. And this will most likely be higher on the altcoins. So the altcoins could drop a bigger percentage, which would once again enable us to buy cheaper, especially if you bought on the top here and are now down 5 to 6% or more, depending on what you bought. So this will enable us to buy cheaper here. But then what happens next? If we put all our money in here, we still don't know if we made the right call. But how do we protect ourselves? Well, we drew one of these lines. But let's say we go a little bit further back. Now we can see here, like I said, it's not exact science, because here we go above it, here we hit it, here we hit it, but we stay a little lower. Here we hit it, we stay a little lower. This is another one of these zones where we can safely say that there's a lot of volume in this area. Either up or down, there is volume in this area. So most likely what will happen is, once we hit this level, we will see high volume. Once we see this level, we will see high volume. And once we see this level, we will see high volume. Now, obviously, I can draw a lot more of these lines. I can draw one here. I can also draw one here. These are all high volume areas. Now, if we look all the way at the top and we go all the way down, that's a 46% drop. Now, will it do that? I don't know. Will it shoot back up? I also don't know. What we can do or know for sure is that once the price hits here, we buy a little bit more. Once it drops further down, we can buy here, or a little above or below. We can time our entries on this. So if we do drop down and we hit this level, we shoot back up, we instantly grab 38% without any leverage, just regular spot buys. And the same goes for this level, 66%. So if we drop all the way down here and we buy, and we are firm believers that Bitcoin in the future will be worth a lot more, then technically the lower Bitcoin goes, the better it is for us. So 2 years ago, when Bitcoin was $15,000 a coin and everybody was selling, everybody lost faith in it. The people that were buying then, I did buy, but sadly I didn't buy as much as I could because I was remodeling a house at the time. So I'm sitting in my investment right now. But back in those red times, in those high crisis times, is when where fortunes are made. And obviously, we don't know if Bitcoin will ever reach that price again. But what we do know is if we can get Bitcoin on these prices, we know that the price has been higher before, so it's very likely to hit it again. So that's the power of our dollar cost averaging. So this is very, very basic technical analysis on supply and demand zones. This one's red. So this is basically supply and demand is basically support and resistance. So these are support zones, but they were resistance zones in the past. So at the very least, we can say there will be volume in those areas, either up or down. We don't know, but we can enter our trades in there. We can enter our spot buys, enter trades. We can try to predict these movements, or we can at least try to ride these movements. Obviously, it doesn't mean that if we buy there, we will never sell or you're forced to hold it. You can still focus on your own strategy, but this is very basic, but it works because everyone focuses on it. So it's very likely that this sell-off was based on this one, and on this one, and on this one, and on this one, and on this one, because people are looking at the historic prices. And crypto is more influenceable than stocks, but stocks tend to do the same thing. But the bigger the fund is, the smaller the impact. But crypto's in comparison still relatively small, so it's easier to impact. But we can see these repetitions, and there will be more in the future as well. All right, so I'm hoping I'm making a little bit of sense, especially to the newer people in here. If you have any questions about this, it's completely understandable. Feel free to ask them in the comments below. I'll try to do more of these videos to explain more to you guys. And yeah, if you like the video, please leave a like and subscribe. I try to keep it as basic as possible. And yeah, let's see you on the next one, guys.